siang semua. Can you guys hear us? Louder. Oh, anda jadi baru selesai makanan aja kan? Okay. Anyway, nice to have you guys today. I'm the moderator for today, Ying, founder of D3 Labs. Anyway, maybe we can start with just a quick introduction about our panelists. Maybe start with Nicholas.
Sure, thank you. My name is Nicholas. Thank you for having me, Chung. I'm a founder at Simpan Asset Management. Simpan Asset Management is a local asset management firm. We primarily manage on behalf of family offices and individuals. We manage onshore assets through our range of mutual funds. But we also manage through our entity in Singapore. And so we help clients primarily out of Indonesia invest onshore but also offshore. So we like an institution. I was previously at BlackRock for about 6-7 years before moving to build Simpan. But exciting to be talking about Web3. So
BlackRock is a big name. What makes you leave BlackRock and come back to Indonesia?
I mean, look at this space. So interesting, right? No, I think it's a growing. The capital markets in Indonesia is still small. If you look at Web3 adoption, I mean, Indonesia is top 5 in trading volume. But if you look at mutual fund adoption in Indonesia, it's only 4% of the whole population. So there's a lot of things in the capital market. So I'm excited, obviously, to be working with D3 Labs, Jen's out here, recognize a lot of things.
Looking forward. Yeah, next Cholo.
Hey guys, good afternoon. My name is Cholo. Co-founder of Digital. So Digital, our tagline is Asia's best ATM chain. So we essentially create access products that allow Asian credit market products like fixed income, bonds, and loans to essentially back our relevant products that are available and essentially integrated into the market. So we are now live. We launched on Monad 2 weeks ago. We're a top 10 protocol on Monad. We'll continue to increase TPO, and from there we're going to expand into other chains. But for us, I guess for this panel specifically, we always look at the interesting assets that we can use to back our local products. And as mentioned, we really look at Asia as our playground. So very interesting to see tokenization projects come out here and the rest of the region, and we think about how we can overlay that as part of our backing assets. And really interested to see what the products are coming out in this region.
Why Asia? Because I mean currently a lot of space is talking about US MMF, US dollar product, but why Asia? Just curious.
Yeah, that's a good question. So my background before I was a founder of crypto was actually also banking. So I spent time at Bank of America and Standard Chartered. And what I saw there was that in the markets, actually Asian credits for the same rating get higher yield than in the US. So essentially, not many people know this, and I think that's also a function of like how traditional markets work. That they are essentially happy with treasury yields, but using Asian credit, they actually can take on more risk, and they can get anywhere from 2 to 3% higher yields.
So sounds like what people will do. Anyway, next one. I think everybody know his logo. He's the USDT guy, Eddy. Anyway, just now we are having a fun debate. How many millionaires here knows Tether? Can you all raise your hand? Tether. How many know USDT? Yeah, okay, I get it. Eddy, that puts your point in. Okay, yeah, go ahead, Eddy.
People know USDT more than Tether, so that's why when I introduce myself, I'm the USDT guy because it's easier for me to actually explain, right? So again, my name is Eddy from Tether. We are the largest issuer of US denominated stablecoin. Probably current market cap is about $185 billion. Everything with assets backed, so everything, all the information is on our website. So my role is the expansion lead. So I cover like Indonesia, Singapore, Malaysia. So everybody that looking to get the support from us, let us know, let me know, so we can talk.
Okay, thank you, Eddy. Hopefully, people know you no longer as just the USDT guy, but the Tether guy. Okay, our last panelist, Whysh. Can I have a wish come true from you?
Maybe if you just make a wish, I'll make sure that
And then Bitcoin tomorrow 1 million?
let's do it, let's do it.
Yeah, or I go there to open a Pokemon card and I get a Charizard card.
That's right.
Yes. Okay, go Go ahead, Whysh.
Good afternoon, guys. I'm Whysh from Finance. Very traditional finance guy from the decade, and started actually in the space since the COVID period because everybody's at home, seeing everything village and seeing everything skyrocket and stuff. And yes, during that time we started to build business. We see that our day will be the second largest day, the next big day. So it's always finding ways to solve the issue, right? Our way is always too small, you can't 10x and 100x just by single day. Bitcoin can go 1 million tomorrow if we all just cut down the day, but our way is a different thing. So we really try to find a way to provide more liquidity. That's why our infrastructure, we work with institutions and also exchanges, Bitcoin mining farm, provide liquidity for the second market of our way.
Thank you, Whysh. Another interesting question. Why is it called Venus? Venus is the planet, the goddess of love.
Actually, why is it called Venus? Because I'm not sure if you believe in feng shui. A little bit.
Chinese, of course I believe in feng shui. All like Chinese here.
A little bit of feng shui, and also because Venus is gold color actually. So everything is about gold, and real asset is the most value carrier is always gold, scarcity and stuff. And yeah, the big guy is over here.
Better go here.
So yeah, that's why it's Venus.
Thank you, everybody. Okay, so maybe giving a quick background of what we are going to talk today. We are here to talk about tokenized finance, and tokenized finance has a big part to play in the existing RWA ecosystem. So, but the thing is, for all this tokenized finance, RWA is not just about one player. It actually has a lot of layers coming from the underlying asset represented by our fellow asset managers here. We have the issuers, which is like Cholo from Moderator. The guy who provide all the infrastructure, provide all the behind the back technology, make it happen, like Eddy, like Tether from Eddy from Tether, and also protocols that allow secondary usage, trading or staking or lending borrowing like Venus here to make the whole ecosystem complete. So maybe I just want to start with maybe from Nicholas' side to share a bit like why Simpan is going into tokenization and how is it actually different from how you guys tackle the traditional financial market?
Look, at the end of the day, it's the same. We're fund managers managing the same asset classes on the public market side, equities, fixed income, and money markets. On the private side, you will be obviously allocating to private equity or private credit funds globally, in the US, the UK, wherever you want. Tokenization is just another distribution channel for us. It's basically, think of it as Netflix versus DVD. So now, we used to sell our products on the DVD side, but the old way, we sell it to institutions, we sell it to distributors and corporates in Indonesia, we sell it directly to individuals. Now, by tokenizing, we access a very different and deep pool of an investor base. And obviously, that base is very young and exciting.
Most of us here are not that young actually.
Fair.
Actually, that's a very good point. So I think the difference is like when you put a set on chain, you are sort of have the global accessibility rather than you do it like the DVD style where you need to have DVD distributed at every single country. Is that what you're trying to say, that you can bring more accessibility or more wider audience to be interested in your asset?
Look, if I constrain myself to the Indonesian regulations, the FSAs, the OJK regulations, Indonesian retail investors are not allowed to invest offshore global assets, right? I mean, of course, you've got these providers that offer US stocks. They're not really US stocks. They're basically back-to-backs and synthetics, right? So basically, tokenization allows people to have global access into real-world assets, the RWA stuff. So if you actually want to buy a physical US stock that's issued by Cholo out here, you can do that, right? The other thing that it does, I think why we like tokenization so much, is it cuts out this thing called settlement arbitrage. Right now in the traditional world, if you want to buy a mutual fund, or if you want, especially if you buy private market fund, private equity fund, the settlement period takes anywhere from T+4 to T+1 month. And that takes a long time. And obviously there are obviously transparency issues, there are a lot of operational, we can get really deep into this, but instant settlement is obviously one of the big benefits of tokenization, including global access.
And I guess instant settlement happens. I have to give credit to USDT for making it happen. So Eddy, since just nice we are moving on to USDT, what do you think is Tether role in allowing all this tokenization to happen? And I'm thinking a lot of people do not know that Tether actually also have a new business arm called Hedron, which is a tokenization infrastructure that people like us can use it to tokenize our asset. Maybe Eddy, you want to elaborate more on that?
A bit of to answer a bit of the questions. The first part of the question is how the history of USDT started in the beginning. Because at the beginning, during 2014, I think people did trades, digital assets. At that time, I think people would trade companies, right? But the settlement is not as fast, right? Probably like a couple of days or 24 hours and stuff. So that's how I think USDT was birthed at that time, which is we need some medium actually settle the transaction function. So that's how USDT started back in the days, 2014, and it was used in the exchange anyway to actually pair with like Bitcoin and other like digital assets.
It's very helpful.
It is.
It's
So
very
I think that's the bottom line of the product that the company is setting up in the beginning, and it helped I think everybody do settlement, right? Which is until today. So I think playing a role in the RWA, one part is going to be supporting the liquidity of and the movement of the assets, but at the same time, I think helping in terms of the settlement, right? Let's say, for example, you want to buy a digital asset, a tokenized asset at 3 p.m. on Friday, right? You wouldn't be able to do that. Like the bank is closed. Again, not trying to belittle the banks, but it's just the system works differently, right? So I think that's how we giving value to the ecosystem, we give value to the public. For the tokenization part, we have Hedron. You can call it like an off-the-shelf and at the same time white label solution for everyone that have the assets want to be tokenized. You can actually leverage the technology. The smart contract is USDT smart contract already, so it's all ready to use. So all the asset owner can issue a tokenized asset using that platform.
I guess that will make life of founders like Cholo doing an insurance platform a lot easier.
It is.
Yeah. Then for Cholo, moving on to you. So you face the Web3 investors directly. I think what Nicholas said is more like he as an asset manager have a thesis. So I also want to ask, how valid does what Nicholas say as a traditional asset manager view is correct? Do you think that Web3 investors also have different kind of investment, especially like the one that you say, why you choose easier is because of higher yield. More risk but higher yield and justify their investment. Maybe you can elaborate on that more.
Sure, that's a great question. So maybe I'll start with kind of how we came about identifying this opportunity and really going for it. So if you look back into 2021, people were essentially already doing yield farming, but they were yield farming with a very bad understanding of risk. So everyone filed in the Terra Luna. We all know what happened there. But it showed that there's product market fit for the desire of on-chain stablecoin holders that they want to earn yield on top of that. So now I think we've gone through fits and starts of how that whole space has evolved, and we've had a lot of failed experiments, a lot of successful ones like Ethereum with a delta neutral trade. But what is essentially our thesis is that for crypto to really grow and expand, for DeFi to really kind of hit trillions of dollars, you need assets that have exogenous yields so you're not relying on crypto. Right now, delta neutral is essentially funding rates. Essentially, the only thing that fuels yields in crypto now is native staking yields and essentially speculative behavior. So our thesis around bringing more tokenized assets on chain that come from a different source of yield is that now you don't have to get better yields by by waiting for a bull market. You can get 78% and 10% from these assets that live off chain and are not correlated with crypto. So you can get pretty good yield without having to move your money out of on chain. Now what that means is that there is that nascent investor base that are looking for these assets. There's a lot of investor education as well, so we do that. We speak to them, tell them like where these source of yields are coming from, how it's different from DeFi yields. But our early traction makes us very kind of like optimistic that this is going to be a growing market. And for the funds and the partners that we work with, to them it's, as Nicholas said, it's just another distribution channel. It's just more dollars that we can use to then put into this land.
What about the preference in asset-wise? Do you think it's like something similar to what traditional investors or family office are looking for versus what Web3 investors are looking for?
It's a good question. There's a lot of education that's mentioned as well, because they don't understand like how is this 8%, is this coming from funding rates, like how are you getting this done? And they don't really sometimes have an understanding of the world outside of Web3. So there's a bunch of like education and articles that I have to put out, okay, that's why that works. Is why that exists. But at the same time, there's also an understanding of risk because of like Luna and the recent stable DPEGs. They actually now question like, oh, 8%, that sounds like street finance. Are you gonna work me? So there is a very slow learning curve that's building. And yeah, I think that essentially will have to be a risk tolerance curve. And I do think that people on chain will behave like TradFi investors, that some will be very risk-seeking, like they would want private equity, private credit, and some might be very risk-averse. They want just USDT, or even like tokenized treasuries.
Makes sense. Thank you so much. Okay, then I guess after we issue the asset, the question is always, what else can I do with the asset? Because nobody wants to just buy and hold the asset. You want to use the asset to generate more use case, more yield, more revenue. I think that's something that Whysh is one of the larger players with multi-billion market cap, multi-billion TVL. Maybe for which side you can give us some insights about?
Yeah, definitely, because I'm very the key point always is always liquidity. I buy maybe worth 1 million, but how can I sell at 1.1 million or even 2 million or 3 million? That's the case, right? So for the previous like traditional assets, what we do is we buy one and then we just sell off if there's a market, Other than that, you can decentralize or just refinance it. But in tokenization and Web3 and decentralization, that helps fractionalize into pieces, using stable coins as settlement with RBA issuance, and large one can help support behind. So how can manage companies like we help these people that has Bitcoin and exchange, people mining farm that have bought from us, right? We help them to generate yield by guaranteeing them assets and value based on how are we going to generate it. Like what Cholo was going to say, right? People and investors really want real yield for real assets. That's our slogan, actually, real yield and real assets. So everything that's backed by real yield, right? Everything that's backed by real yield,
Just notice it.
It's there. What is there? So we are really trying to help traditional finance guy to reach into Web3 and using RWA as a narrative to build more yield with the assets they recognize. Because traditional people doesn't really understand Web3 products, but they do have very good projects. When they have very good projects, like let's go to Cholo, they just tokenize it and then you provide the secondary liquidity. So we make the market running, like if Bitcoin, nobody want to buy Bitcoin, you will not go to 1 million. You need people to buy, then it goes to 1 million. Yeah, I mean that's the logic.
That sounds a lot like what CZ and Peter debated last week. Okay, so anyway, a quick question. So just now, I think Cholo mentioned about Luna. Anybody here remember Luna already in the industry during Luna time? I see a lot of people nodding their head. Yeah. So hopefully, I guess all these players are here to create a token or create a project that offers sustainable yield so that we will not remember and would not need to remember Luna again. I think that's already a painful year where everybody was so sad in the industry. Okay. Gentlemen, anything to add on before we move to the next question? Okay, all good. Okay. So now something a bit more controversial. So So I personally is a bit from a hybrid degen but regulated background from Total Crypto as an exchange from now D3 Labs. So I guess a lot of the question is always about, should you go unregulated first or should you go strict for regulation? So I guess let's say for more there's Venus and Cholo here, there's more from the DeFi protocols. There's Nicholas here that's very, very regulated. I think Eddy is a bit more 50%. Some parts of the business is regulated, some parts is still on progressive regulation. Who want to start? Maybe from the regulated perspective.
Sure, I'll be the bad cop here. I think I have the traditional capital markets or the broader populace are uncomfortable about three things with regards to going on-chain. One is obviously around custody, right? We went from a world where it's all about exchanges fall apart, fraud, whatever it is, then we go to self-custody, and then you see all these news about robberies and all these crazy stuff, right? So custody still hasn't been answered in a way that's institutional. Now I'm not going to get too technical about NPC or HMS or whatever, but HSM, sorry. But like the idea of making sure your assets are kept safely in an institution that you trust, you can see, right? That where no one person can just grab it and leave, is an area that is lacking in crypto, in my opinion. Number two, investor protections. That's a very big area. All the financial services authorities in the world are obviously concerned about. Once you go to Web3, it's like the Wild Wild West. Obviously, it's getting much better. It's becoming way more institutionalized. New ideas, cloud, obviously all these regulators already have frameworks for many years now, 5 years, 6 years. But still, this idea around how can investors be protected and who will be liable still remains a question. And the third part is around AML KYC. Now, this is a it's a bit controversial because how crypto started out is because people want to leave the trapped traditional finance world, right? And they want it to be anonymous. But I don't think anything can be super institutional, because what is institutional, right? I mean, aside from the technicals, it's basically big money coming in, and in order for big money coming in, the pension funds, the sovereign wealth funds, whatever it is, you need to have proper AML KYC processes.
So maybe adding a bit my perspective, I can see why both sides want to do it their own way, but maybe this one Cholo cannot really do it, because when we do it Web3, we do want to get regulated, but sometimes just that regulated takes like 3 years, 4 years. So for example, like let's say in Singapore, Project Garden has been there for 5 years. In Hong Kong, they have been also talking about tokenization, but we don't really see real massive adoption yet. And it's actually very difficult for startups like us. We want to be proper, we want to be combined, but it's just that how many years can the startup get? So I think that's something maybe Cholo can give some perspective from the digital side.
Yeah, it's a great question. Like, essentially the first year of digital was just talking to lawyers and talking about like what can we do, how can we get this off the ground, and what structure actually works. Now to your point, we always kind of keep regulations in the back of our mind. Like we essentially run the protocol through, for example, like we have a partner fund manager that actually custodizes the assets that are off-chain. They're licensed in Singapore. We have kind of like a BVI entity that issues the tokens that allows us essentially some form of like safe harbors in terms of distributing that on-chain. And we went with this approach as kind of a hybrid. Some parts of the business is regulated, some are not. Because we believe that DeFi's power is actually its permissionlessness and composability. Like we wanted an asset that was backed by RWA, but wouldn't be alien to the accepted protocol like Tether, for example, where you can leverage it on money markets. It behaves kind of like any other yield-bearing stablecoin, but the underlying asset of it is something that's off-chain. And the regulations, I believe, will catch up. I think you're already seeing that in the US, for example. The Judas Act, I think the Clarity Act is going to be next, where there's going to be a lot more regulatory clarity around what projects can and can't do and what's allowed and what's not. And that actually is going to be more, I would say that's very beneficial for DeFi because at least DeFi has essentially gone to become like a 200 billion TVL industry without regulatory clarity. But if people actually know what the rules of the road are, then I think you're going to see a lot more teams be a bit more aggressive in terms of growing this pie because right now everyone's just kind of afraid of walking past a red line. Like, we don't even know where it's written.
Actually, in Cholo's perspective, is the best way is not to be about regulated or not regulated. It's more like regulate it in a certain hybrid way where you can still do business as a startup, but still giving some partial confidence in the consumer side in what they are getting in. Is that what you are saying?
Yeah, precisely. So I think for us, even we essentially operate as if we were regulated. So anyone that wanted to mint and redeem directly for us, like our yield-bearing assets, they have to pass KYC. But we don't really get involved with the permissioners. If they go and mint from us and they put that on the DEX, and people buy on the DEX, we can't police that activity. So we kind of work with this hybrid kind of structure where at least we know that we're not tripping up any KYC issues because our banking partners also would not be happy with that. So it's kind of like, yeah, it's kind of like Frankenstein also, some regulation and a lot more than internal operational guidelines.
I understand. I think that also goes to, just now you mentioned the DeFi side has 200 billion TVL. Isn't that almost like millions taking up almost more than 1% of it?
Hopefully maybe more. Okay. The question is about regulated and non-regulated, right? I think there's one tagline that we always listen outside, right? Maybe seeking forgiveness is better than seeking permission. Okay, let's talk about innovation and product and project that is thriving in the market, right? It all started like, I don't care about regulation first, but this thing is important enough for me to even start it without saying regulation. But of course, what Cholo has mentioned now, we always put the law on our back. We definitely don't break any law when we building any product, but innovations and to improve, right? We have to cross some borders, but I'm not promoting that to everyone to cross some borders, but to improve, like in protocol confidence, we are trying to build the world first crypto bank focused on Artemis itself. So how can we really try and how can we, who can we talk to about regulation? No one, because nobody is doing it already.
I feel you.
Right? So if we are doing the first one, we might be the regulators for the second one. So like the SDG is super big. I believe that there's a lot of countries regulation will consult them for their ideas.
Just a bit showing off my background. I see that during my crypto days, after the first one we got a license, suddenly everybody used our framework to make it into the actual licensing framework. I can see that happening.
Yeah, definitely. Because the first one is always the hardest. You have to go through a lot of barriers, knock down a lot of walls, and then you have to burn sweat and tears and blood and stuff. Then the second one, you just copy and paste.
Yeah, but the good thing is at least you have the head start, you have the first mover, you can grow your business before people catch up.
Yeah. For being the first mover, right? We gain trust instantly after getting regulated.
Actually, that is very related to Tether. That's what I want to bring it to. And because I believe, like in the beginning when USDT first came up, people get so much traction because it's something that crypto needs. I myself, as a crypto trader, I have to trade my crypto against Bitcoin, which Bitcoin itself is so volatile. It just doesn't make sense. And then Tether came in and saved all the traders like happiness with it. So there's also like something that initially is not regulated, which after that I see Tether is going a lot more towards seeking for licenses, even having Eddy as a country manager engage the regulators here in South Asian country. Very interesting to see what's the perspective change, how you guys actually decided to change the strategy and start focusing more on regulated initiative.
I think, again, there's a time for everything, right? I mean, in the beginning, you always kind of like, going through like the innovation phase, doing all the hard work in the beginning, and then you start to get traction, you gotta play by the rules, right? When you wanna scale, when you wanna work with everyone, you gotta play by the rules. And going back to what Nick has been saying, like the 3 points, especially goes down to one word, which is trust, right? You want to build that trust. You want to be the one that, focusing on, working with all the ecosystem, right? So I think that's the part that we're talking at this point. So we're engaging with, all, regulator across the region, talk to them, becoming their sparring partner, sharing the knowledge, thinking with the, including with Indonesian regulator, right? Sitting with the OJK, sharing with them, becoming the bridge for them to actually learn more about, stable coins and how, stable coins will operate in the Indonesian economy. So I think, again, going back to my first statement, there's a time for everything. And, once we want to work closely together, in each part of the ecosystem, I think we need to start following, like, what, the rules and the regulation either in the region, in the country, or across globally.
Actually, this also makes me think of another second part of the question for Eddy. Because at the end of the day, I myself deal with just one regulator and it's already so much work, so much engagement. So, what is the regulatory strategy by Tether, especially you guys are a global company, you guys have US, Europe, Abu Dhabi, Indonesia, Japan. How do you guys handle it?
I think that's the question for Era to answer. I think, again, look, I think you can definitely find out, like, in public, right? Like, our CEO is up there as well, like, talking to regulators. I think, he was talking in YouTube, he was talking, like, in the open public interview. I think, we're definitely working closely with the regulator, trying to shape the ecosystem together because we are the early mover, right? So I think we have the advantage of, like, having the knowledge and see how we can help the regulators. I think it's shaped, the way we do business, and I think, by looking at the numbers, like, Paulo always been saying, like, math do not lie. People can lie, but math do not lie. So looking at our numbers, I think we're taking part.
Guys are doing very well. Okay. And I guess there's also a good perspective to actually hear from different participants. I like what Cholo mentioned actually, that the underlying asset manager is Singapore, but you guys are actually utilizing BVI framework. So actually this also brings back like the idea for blockchain, for tokenization, for crypto, where everything is global, where we are actually seeing projects using cross-border jurisdiction to enable their project. So in a way, actually, it's not even unregulated. It's actually regulated. It's just that you are utilizing different pieces of the jurisdiction for different part of the business. Yeah. Okay. I guess there's a very good insight about like regulated versus non-regulated. Anybody want to add on anything else before I move on? Yeah. Okay. So I think we have about 15 minutes left. So just now we are in the room discussing what should be the question to end off. So we just saw last week there's Peter versus CZ arguing about Bitcoin versus gold. Maybe we can do a short session like that. Can we have Bitcoin versus RWA? So McKinsey predicts that by 2030 or 2030 that the whole RWA space will be $16 trillion worth. But we also hear prediction that Bitcoin will be about $1 million, which translates to also about $16 trillion worth. So are you guys supporting Bitcoin? Are you guys supporting RWA? Or if you are neutral, maybe you can give some reason why you think so. Who do you want to start this first? I saw Cholo start for punching. Okay, Nick, you got arrow.
Yeah, Bitcoin versus RWA, right? I'm not one for predictions. I generally think that if you, how should I put it? We all thought that Bitcoin is digital gold, which to an extent it is. But when you look at the past few months, how Bitcoin has performed, getting washed, liquidated, and whatnot, not proven to be digital gold after all. Well, sorry, it's not proven to be a gold equivalent after all. It's still a risk asset at the end of the day. It's in relation to gold, in relation to gold first. Both gold and Bitcoin is not a cash flow generating asset. It's basically just a precious thing that you hold on the back that there is scarcity. But that's why I like IDBW. So I'm not going to predict where Bitcoin is going, but on the front of the IDBW, I think there's a lot of promise because what you're essentially doing is you're taking the really good things from the world that's cash flow generating, that's profitable, whatever you guys call it, projects, right? We call them assets. That can translate to more cash being generated for investors, and obviously there are a lot more investors that are untapped than the regular traditional capital markets in crypto. So I'm really excited about it.
I guess we have one vote for RWA then. Cholo?
Well, two parts. My personal bias is that Bitcoin will win. It's because it's good for my banks. But my business bias, of course, is RWA. I think to Nick's point, even at like 16 trillion, that's still just scratching the surface of how much actual RWA is out there issued in the world. Like the equity capital markets is easily in hundreds of trillions. Same with the debt capital markets. And yeah, 16 trillion may seem like a lot for people in crypto, but if you believe the alignment and just like the pace by which big banks are exploring tokenization projects, big asset managers are exploring tokenization projects, while the liquidity may be fragmented, I think that a lot of it is coming, and people in crypto underestimate how big the TradFi market actually is. This 100 trillion, your size is not size counted, right? That's so. I'm more bullish on the RWA side because I think that once which is the point, once someone breaks the mold and gets a successful thing off the ground, everyone's going to copy as well.
Maybe Whysh first, because I see that in videos now Bitcoin is one of your biggest TBL contributor. What about you?
For me personally, I hope that Bitcoin first because it is I can retire for generation already. Okay, so basically, I'm more into a neutral part because like we mentioned just now, it's like RWA can easily go more to hundreds of trillions if everything can be tokenized. And I wish that in the near future, right, everything will move into a stage where we call hyper-tokenization, where everything can be tokenized. Then 60 trillion is just a small number in the capital market or in monetary value. But however, if you can see, if you zoom out and see the whole picture, right, if Bitcoin goes to 1 million, RWA will eventually goes to a lot as well. Because the global adoption and putting money in and pumping liquidity into the crypto market, that pumps Bitcoin to 1 million. And also, because Bitcoin 1 million, everything will be tokenized. Because everybody is rushing into the market and building something, maybe real asset, real deal today. So I'm very neutral, but personally, Bitcoin.
Hey, Eddy.
I think I'm definitely on the neutral side because we supported those two assets, right? Because we are part of central bank and also like the liquidity. So I think, definitely, but personally I would love to see more RWA because, our crypto assets transaction right now is like only over $3 trillion, which is like barely scratching the surface, right? But somehow like all of us like, living on the sky and we don't want to touch the wall, but I think we've got to build the bridge between the traditional finance and the crypto assets industry, right? So I would love to see more, asset owner actually like, tokenize their assets and working closely with everyone in this ecosystem to actually expand and scale and creating more liquidity in the secondary markets. Everybody understand about the ecosystem. Everybody understand about the industry.
Actually, what Whysh and Eddy say is really true because when we think about 18 trillion, which we are assuming that both are independent, but actually if you take a look at it, if everybody start rushing into on-chain money, and looking at how traditional market is, it's always a portfolio. There's times you want to hold gold, RWA. There's time you want to hold more equity, there's time you want to hold more cash. So I guess what is being the takeaway here is that 18 trillion is not that, 16 trillion is not that big a sum of gold. As long the on-chain adoption are there, and looking at a more traditional portfolio management point of view, it's actually possible that both can hit their target. Then it's double happiness for us. So we earn from the business side, we earn from the personal investment side. Okay, I guess we have about 10 more minutes. So, very last generic question, a boring one. What do you see will happen in the next 5 years for the RWA space? Will regulation and DeFi converge? Will we see more money on chain? What is your personal point of view? Eddy first, then since you are last just now.
I think, I think the next 5 years, I would love to see everybody start using programmable money or money on chain. Obviously, there's a pro and con by going on chain, but would love to see that. And would love to see everyone in this room who understand, who have a wallet, and who have money on chain.
And who want to be second? Whysh?
All right, see you.
We got 1 million.
We got 1 million. Tomorrow. Okay, so I believe that in the RWA space, right, it will be very, very, how to say, there's a lot of liquidity is going to be pumping in because what I see just now that I mentioned, right, is the stage of hyper-tokenization where what Eddy says is true, everybody has to have a wallet. Might be a wallet with a super app feature where you can just snap a photo and put it on chain. That's RWA, like fine arts. It's your own picture. If everybody want to buy it. So in the near future, for even in the crypto space, right, the global adoption will be increasing tremendously. Even funds are tokenizing now, real assets and stuff, like ETFs coming on. So what I see is 20 to 30x in RWA transactions.
Cholo? Nick? Which one?
Yeah, mine's a bit more niche, I think. I do think that when people say tokenizing, I think people underestimate the everything part of it. You're seeing like very early experiments now, people tokenizing Pokemon cards. You're seeing very...
I'm going to mention that I'm a collector, man.
Yeah, exactly that, tokenizing art, tokenizing... Like we talk about here like boring financial products, but the tokenization, the definition of RWA, I think is going to keep increasing. Like there's now tokenized mortgages in the US, for example, for figure market. So I think people are maybe not really seeing that the everything part of it is beyond financial assets. You also see prediction markets being like completely taking the narrative in the US by storm. Right? Essentially, that's tokenizing sports outcomes. So I think that this whole tokenization thing is just really in its early innings, and I think we're going to see some really wild stuff when we hit the real world.
I'm bullish. I mean, I'm all about providing, democratizing access to, assets that are really good, but are either only accessible to the biggest pension funds or the sovereign wealth funds or not to. I mean, all these assets are not accessible to Indonesians if you're looking at the landscape. What I would say about RWA, and what really opened my eyes is what we're doing actually. I mean, we started tokenizing money market funds, right, to provide yield in rupiah, which we'll see how it goes. But as we delved into tokenizing our private credit product, it suddenly opened my eyes to the possibility of everybody out there having access to, a dollar income generating asset at 11, 12, 15% that were previously inaccessible, as I mentioned before, by the Danantaras, right? And it's just silly that not even the Danantaras and hedge funds in Indonesia are not accessing those. So for us, in the crypto space and the Web3 space, there's a really big opportunity to access some of these institutional assets at fractionalized values.
Fractionizing 500k transaction card.
Well, yeah, exactly. But yeah, I mean, I think it's a really interesting space.
Okay, so maybe let me have a second part of this question. So we talk about 5 years later, and a lot of the current crypto degen kids, I would say, will become the next generation of the wealthy people in the world. What do we see might be the next asset to be tokenized? So let's say for traditional assets, we are also exploring tokenized collectibles, like and the collectibles are structured into proper funds and fund managers, whiskey funds, watch funds. What do you think might be the next on top of just financial product that can be structured into a fund and tokenized?
Everything can be controlled, and everything can be tokenized.
But looking at the degen kind of behavior.
For me, it's all about a risk-return spectrum. At the lowest end of the spectrum, you've got treasuries, you've got government bonds, right? I mean, that's the easiest thing to tokenize. Then it's credit, income generating credit or bonds, right? And then after that, you go into other, like direct lending, securitized product, basically stuff that spits out cash within the income space. Then you go into the growthy stuff. I think stocks will not be tokenized because it's pretty accessible and whatnot, but the likes of private equity companies and whatnot, right? I mean, that's pretty institutional. Then you get into alternatives. I think that's where, stuff like Pokemon cards or wine or cars or art, it has already gotten some prominence and actually expensive and quite institutional. But I'm actually quite bullish on the art and classic car tokenization space, primarily because it's been a long, it's an asset class that's not really institutional, but institutional for family offices and kind of with individuals. A lot of people already have these funds, but there's a lot of, the choke point is always liquidity, and if you talk tokenize it and you put it up on Web3, there's instant visibility, which can create an impulse for liquidity.
Thank you, Nick. Oh, Cholo, which asset?
So if you think about the question, like the crypto natives now are very young, right? They're very young, they're very digitally savvy, they're digital first, they're online first, but they're also big consumers of AI. So actually my interesting prediction is that they're gonna start they're gonna start tokenizing AI agents, and if you can create this AI agent that's super good at what it does and super useful, then they can just roll it out and make money off it. Because you train this agent to be super useful, and then you can just monetize it. And I think that's already happening in AI, but I think for crypto on top of that, it's just going to supercharge it.
Okay, Eddy, what is the asset? Don't give me USDT, it's too boring, something else.
Since I'm wearing the purple shirt, so I'm going to say
Okay, it's a good one, it's the same one. Yeah. Whysh?
I think let's not just tokenize about one asset. What about tokenizing an industry, such as we are focusing on tokenizing commodities, utilities, and people. So even it's in wartime or good or bad times, right? Commodities is always a bit necessary. So maybe the DJs now will understand real assets provides real yields. Maybe that will be the tokenization for the next version.
Can I say my point of view? I will want to make a tokenized Pokemon card fund. Yeah.
let's do it.
Yes, it's on now. Yes, I have been asking my asset management friend if they have interest in doing this.
Is that why you texted me last night?
Yes, of course. Bro, I have been going around preaching about Pokemon cards in Indonesia. So many people got into the space because I'm issuing them. Okay. I guess this is the last 2 minutes. Any final words you guys want to have for the audience? If not, I think we can end this 2 minutes earlier. Anyone?
I think there's enjoy the place, enjoy the event. Online, everyone's good. Say hi to each other, so yeah, enjoy the day.
Please make Eddy happy. He has very nice Tether merchandise which I've been begging for months, and I finally gotten one.
It's very limited, it's only 8 t-shirts, so yeah.
Can I get one?
It's a tokenized asset, basically.
Okay, anyone else? Final words?
Just thank you for organizing and inviting me over. It's a very fun conversation, and I'm sure we'll do more of this.
Very much. Always happy to have all the pros, all the professionals here to share more insights. Nick?
Thank you. And I think what I forgot to mention was there's a development angle with tokenization drastically
That makes sense. That can actually even help build up the nation infrastructure.
Right, not only obviously from a transparency and an accountability and auditability perspective, the organization, but more participation from people like you and me. So we can actually put in money to build the roads and bridges and airports that need to be built in Indonesia.
Actually, that is like the spirit of democracy. You are there to also support your country, build your own infrastructure for the
We
country.
can technically already do that by buying the bonds and buying the stocks of the state-owned enterprises, but there's an inherent lack of trust and kind of more exposure to the direct assets, right? Again, those assets are only accessible to institutional investors, the big guys, but if we tokenize that, we can actually create an influx of real change.
Yep, understand. I think people of Indonesia here is very patriotic. They will definitely love to support their own country's development. Okay, guys, that's the end of our panel. Thank you very much, everybody. And for those who like to drink, there's an after party tonight at Noya and Babe, the largest club in Jakarta. Feel free to apply and see you guys there. Okay, thank you very much. Thank you for all the speakers. Thank you. Bye-bye.
감사합니다.
Oke, thank you guys. Kita foto dulu bersama-sama. Let's we have a picture together. Group shot. Thank you to all the panelists and also our moderator for the session. Oke, kamera silakan standby. Kita abadikan momen ini.